All right, congratulations. So you had your first 50K month, but I can pretty much guarantee that you're leaving about a couple $1 million on the table unless you're doing these things. So in this video, I'm going to talk about why your 500K per year business or your 50K per month business will never sell for millions of dollars, and thankfully how to fix that. So for context, my name is Ben Zogby. I help people sell their businesses for millions of dollars, online businesses. In 2023, I sold my trading education company for $1.8 million to a private equity firm. They said it couldn't be done, but we did it. And so in this video, we're going to be talking about exiting your business and why people don't understand the difference between a profit and an asset. So obviously profit, you're making profit already, but most digital founders, they don't structure their business for an exit. Okay, so the top 1% of founders are thinking about these things as they're building, so they're actually able to make money twice. First, when they sell their product to the customer, and second, when they sell the business to a private equity firm, a strategic buyer, or even sometimes a institutional buyer. And so if you haven't figured it out by now, the secret to making a lot of money is leverage. So how can we leverage the asset that we're building? How can we leverage the customers that we're getting to not only make the customer valuable to us, but also to just amplify the value of the enterprise that we're creating? That's what we're going to talk about in this video. So every time you make a sale for your business, that sale could be adding enterprise value to your enterprise. So think about it. If you're making $10,000 in monthly profit, your business is likely worth, if it's structured the right way, it's likely worth between 360 and 720 exit value. That's enterprise value, exit value, same thing. So that's about a 3 to 5x on your annual earnings. So if you're making 10K a month, that means you're making 120K a year. So maybe 3 to 6x. So 360K to 720K enterprise valuation. That's typically what we're going to see a business that's making 10K a month in profit sell for. However, if you're making 50K a month in profit, which if you're on this video, there's a good chance you're up there. You could potentially sell that business if it's structured the right way for between 1.5 and $3 million, applying the exact same exit multiples that we applied to the 10K per month in profit. So what you effectively have done by structuring your business the right way is you've not only allowed your enterprise value to magnify, to amplify, but you've made $40,000 in profit more, but your exit value went up by multi-millions. So we've created this leverage, this leverage that we're able to amplify the value of our business just by making a little bit more. And you can see how that leverage amplifies if we're making 100K a month, 250K a month. Imagine even $1 million a month if we're structured the right way. This is how we see founders sell for 8, even 9 figures, right? You see these businesses that are making like 100K a month in profit, and all of a sudden they sell to a private equity firm or a hedge fund, or not a hedge fund, but like a search fund. They'll sell for like $50 million, and especially in emerging industries like crypto right now, we're seeing companies sell for just huge multiples. And so if you're not taking advantage of this leverage, you're leaving money on the table. And luckily for you, we're going to talk about that in this video. So 99% of founders build for profit. So they come into business, online business, thinking, I need to make money for myself. I want to find the most profitable way to sell either my services, my time, or something that I've created digitally in order to make a profit from that money, obviously, right? But most founders don't actually think about the tactics that they're using to build their business for enterprise value, which means 99% of founders will never exit. So for context, I've seen businesses making 10K a month, right? We talked about the EV up here, right? I've seen businesses making 10K per month sell for even a couple $1 million. I've literally seen that happen. I've worked with them and we've gotten exits for these 10K a month businesses. I've also seen businesses that are making $1 million a month have zero interest from buyers because of several factors. First of all, they could be heavily reliant on the founder, and the founder just refused to work themselves out. And we'll get into these exact reasons in a minute. But there's several reasons why $1 million a month business could be zero value to anyone but the founder. And obviously we don't want that to happen because what we're trying to do in this video is amplify our value. And so instead of building something that just makes you money, I strongly encourage you to listen to this video and build an asset instead. So it's the classic question of, would you rather have $1 million in the bank now, or would you rather make 10K a month for life or the foreseeable future? And in order to answer this question, we have to consider a few things. Now, first is opportunity cost. What would we be able to do with that money up front versus if that money was paid to us over a long period of time? Now, a lot of people, myself included, want to build a business in their 20s or 30s so that they can sell it and basically do whatever they want for the rest of their lives. Now, that's opportunity cost. If you want to spend more time with your family, with your kids, right? And instead of that, you'd have to be spending that on the business to make the 10K a month. Well, then selling it for $1 million or $2 million is probably preferable to getting 10K a month for 10, 15, 20 years down the road. Also, longevity, something we have to consider. How long will this business continue to perform at its current rate? A lot of online businesses, I don't want to say they're here today, gone tomorrow, but the dynamics of the online business ecosystem are constantly changing. And so for you to assume a business is going to be around or relevant for more than 10 years, well, typically there's going to be some fluctuations that's either going to require that business to adapt to a changing landscape, or actually that business might become irrelevant. And there's always a risk of this. And so, in my opinion, as a first-time founder, if you're trying to build wealth for yourself, locking in that value that you've created is usually a no-brainer for people. And so that's my opinion on the thing. So time value of money, also one last thing to consider here is often money now is worth much more than money later, right? Money now is guaranteed, taking it into the bank. Money now can be used to invest in other things. It can grow, and you can also buy your time back or get your time back. If you sell your business, you no longer have to run the business, right? Someone else will take that over for you. So that's my opinion on building an asset. And by doing so, you at least give yourself the choice. So if you don't build it as an asset, you're never going to have the choice. But if you do build it as an asset, you will hopefully be stuck between two great options: either owning a great business for the rest of your life and that business continuing to produce cash flow for you, or selling the business to an entity that wants to buy it, that's willing to pay you big money for it. And so the main advantage here, it's not just opportunity cost, but it's also profit. So if you think about it, most founders, most business owners, digital business owners, make more money on the single day that they sell their business than they did during the sum of the entire time running their business. And there's a few reasons behind this. So as a business owner, obviously you have revenue, but then you have expenses. And then you have a ton of taxes that are only going up. It's ridiculous. Depending on where you live, you could be paying anywhere from 38 to 50% on the net income of your business, which is already subject to business expenses. And so off the bat, it's going to take you years to accumulate wealth this way by just running your business, hoping that the cash flow will start to stack up, especially over long periods of time, like 5 years. Other expenses pop up. You're going to have other things that are going to cut into the small margin of profit after expenses and tax that's left for you. Versus in year one, honestly, on day one, as a business seller, you get 100% of the sale proceeds and you pay a small capital gains tax, which is 15 to 20% based on the size of the business and based on where you live if you're in the US. By the way, I'm not a tax advisor, I'm not a tax professional. This is not tax advice, but this is just the reality of things. You're going to pay a lot less tax, typically half of the tax that you pay on business income, because it's capital gains. It's intangible asset. You're selling your business as an asset. Whether you do it as a stock sale or an asset sale, you can still claim that you're selling an asset, and you can pay much less tax on that. And so typically, like I said, most business owners, most founders make more money on the single day that they sell their business through the sale proceeds than they do the entire time running their business. So that's something to keep in mind as well. And there's nothing stopping you from going out there and on day one, starting a new business. You take the cash, the proceeds, put in your bank, invest it, whatever, and get right to work starting another business, right? There's nothing that says you can't do that, except if you sign a non-compete. You can't start a business that competes with the business that you sold, which most buyers will probably have you do. So the burning question here is, how do you build an asset? So in general, there's 6 things that determine whether a business is just a cash flow machine for the person that owns it or if it's an asset. And so the first one of these things is audience. So your business becomes so much more valuable when people recognize the brand versus the individual. So if you can build brand equity with your business, you're doing yourself a huge favor. Brand equity is the number one thing, or one of the top things that private equity firms look at when they're going to make an investment is, does this thing have any brand equity? Do people know who this entity is? If the answer is no, well then it's honestly probably easier for them to just go and replicate what you're doing if you haven't created any brand equity. So that's a test we'll run throughout all these bullet points is if it would be easier or cheaper for a private equity firm, individual, or other entity to go and replicate what you're doing, they're probably not going to buy your business because they can just go and replicate it. And so building an asset, we build ways for your business to retain that value, and so that people can't go replicate what you've built. So audience is number one. Second one here is flow. So you have to have reliable systems for getting customers in the door, obviously for cheaper than what they pay you. So literally business 101. And so if you can go and create these systems that do this themselves versus you having to go create every single customer, then your business has a lot more value. I'll give you an example. So a lot of businesses nowadays, I get freaking 20 DMs a week in my Instagram of people just trying to sell their own personal services. And so if you remove that person from that business, then there is no business because there's no flow. The business doesn't create customers itself, right? So flow is things like SEO that's been built up over time. It's been word of mouth that's been, transferred among people in the industry that know about your brand, know about your business. It's content that you've produced and published over long periods of time that have engaged people, that have built a following, right? If you own your following, if you have a big following, that's also an asset. And that goes along with the audience as well. But just having a business where you're offering your services to people and you have to go hunt down every single new client or customer that you haven't built flow. And so you haven't established an asset. Content. So this goes along with it as well. And so if you have an engine that can create content, ads, do the outreach, right? Like I said, anything that can do this, an entity that can do this within your business that's independent of you, even if you got hit by a bus, then you likely have a sellable asset. So content nowadays is a very, very important thing about every single business. Basically, every business relies on content. So not only do you need to establish flow where you're building the systems to get customers, you have to establish a content engine that's able to produce content that stimulates that flow, that allows people to discover it. So this is typically a team of between 1 and 4 people on your staff that are responsible for the creativity, the authority, the decision making, the posting, the engagement. The content ideation is another big thing. If your business can't ideate content, if you can't come up with topics to either talk about, post about, etc., without you being there, then your business isn't an asset, it's a job. So private equity buyers don't buy jobs for themselves. They buy self-sustaining assets that they can go and add value to, right? These investors, they're not buying jobs for themselves. They're buying things that they feel like they can scale given outside expertise. And so that's a big thing to keep in mind here too when you're building an asset. Fulfillment, obviously you need a way for customers to get what they paid for. So this is typically, again, a team internally of 1 to 4 people additional that are strictly dedicated to giving customers what they pay for, whether it's a support team. If you're selling a digital product, you probably only need 1 support person. But again, a private equity firm, if you leave after you sell, a private equity firm is not going to want to know that they're going to have to be dealing with support requests. Their time is a lot more valuable than having to go and buy a customer support job for themselves. So just build this system. You can build this for very cheaply, especially if you have just like a digital product business. If fulfillment is easy, if it's just support, just hire a person, train them on how to do support, and then your business will become much more of an asset than if you weren't to have that person on your staff. Back office, okay? So you have to keep track of things like lifetime value of customers. You have to keep track of things like cost to acquire customer, monthly recurring revenue, annual recurring revenue, return on ad spend, and profit margin. Thankfully, things like your Facebook ads manager and your Stripe account will keep track of these things for you. But you need to make sure that you're on top of these metrics and you know them. Because if these metrics are sliding over time, just because your revenue is going up, if your cost to acquire a customer is also skyrocketing, well, that's not great, right? You want to make sure that you're keeping track of these things and you know where they stand in comparison to where they were a month ago, a year ago. And you also need to have systems that take care of administrative tasks. So things like running meetings internally. If you're doing that, then it's less of an asset than if you have an operator that's doing that. Things like I said, support. Things like organizing your Slack, organizing your Google Drive. You can organize your business using software, people, AI. It's going to be a lot easier to sell if you have a built-in back office team or back office strategy at least. Then finally, founder independence. So I like to call this the bus test. So if you were to get hit by a bus and your business would go away, then you probably don't have an asset. You probably have just a cash flow machine for yourself. So things like tasks, like doing the boring tasks day after day, decision making, creativity, authority is a big one. If these things are all delegated to team members who are willing to stay on long term with the business, then you've created an engine, right? So this is all about creating. I like to call it you create a Porsche and then you sell the keys, right? You create a really valuable asset that can do great things, that can generate lots of cash flow and has been proven to generate cash flow, and then you sell the keys to the castle. So if you're a founder, I don't care where you're at in the process, if you're making $0 a month or you're making $50K a month, you can benefit from implementing these things in your business because, like I said, these things only serve to create leverage, and leverage amplifies value. And so if you're not putting these things in your business, you're really missing out on a potential huge life-changing payday. For me personally, I didn't start implementing these things into my business until after we were past 20K a month. And so it took me a while to actually implement these things into my business to make it sellable. And as a result, I sold my business probably 2 years later than I could have. I ended up getting the deal done. I got the job done when it mattered most. But I could have got the job done 2 years earlier if I was on top of these things. And this is why I'm making this video, is because if you're building right now, then you can start implementing these things into your business so that when the time comes to sell, you're ready to go. You don't sacrifice any value. You don't spend any downtime trying to incorporate these things into your business. And you don't run the risk of breaking your business by trying to force these systems in when you've already designed the business to do something else. Okay, so it's much easier to build for sale than it is to take a business that you've built not with the sale in mind and to try to force it into a sellable business. All right, so keep that in mind. Thanks for watching. Once again, my name is Ben Zogby, and subscribe if you haven't already. Make sure to like this video if you got some value, and I'll see you guys in the next video.